Hey everybody, it's Brian Shannon from Alphatrends.net. Today is Friday, the 10th of March, and I had a couple days off this week, and looks like I missed a pretty good sell-off. The biotechs were the weakest, down close to 10%, and we knew that they were initially the strong group this year, but that turned negative and has brought that index now down 8.8% for the year. The S&P is only at 0.95%, so there was a lot of FOMO those first couple of weeks, but if you had chased the market, then you're pretty much guaranteed to be down in terms of the average price since the beginning of the year. The anchored volume weighted average price from the beginning of the year is up just over 400. This market down at 386. It's just ugly. So here on the right, we saw that the market last Friday, we spoke about what would be the better scenario would be for a gap up from FOMO buyers and then a failure later in the day. This is the anchored VWAP from Monday right here, and you can see that the week today, the week to date volume weighted average price was then tested right here and failed, and it's been lower ever since. So just a pattern of lower highs and lower lows. It dragged that 5-day moving average down, and this is again why we look at things such as the anchored VWAP from the low earlier in the month as a potential place for the market to turn higher, but it didn't. And even over here, it wasn't a buy. It didn't make a higher high above the flat to rising 5-day moving average. So a lot of pain could have been avoided if we just followed some basic guidelines. And that failure this week came right at the anchored VWAP from that high in February and the 20-day moving average. We're now below the 50-day moving average. We're below the 200-day moving average. We're even below the anchored volume weighted average price from last October's low. So looking at this on a weekly time frame, it looked like, again, this is where we talk about, just because it made that first higher high doesn't mean it's in an uptrend. We need to see it confirmed with a flat to rising 10, 20, 30, 40 week moving average, etc. And that this was a potential failure. It is now confirmed as a failure. And as I've been saying all year, if they didn't scare you out in 2022, they're likely to wear you out in 2023. We saw this market, I think it was up 12% year to date just 2 weeks ago, and now we're only up 1% in the S&P 500. So volatility remains the focus here, and this is why I'm glad I'm a trader and not an investor. I can't imagine the emotions that traders have to go through with all this nonsense. The anchored volume weighted average price from the October low for the Nasdaq is still down a little bit lower here at about 282-ish or so. I wouldn't be surprised to see that tested next week. And back into the S&P 500, what I'd be looking for here is, now that we've broken this important level where the 200-day moving average and the anchored VWAP from last year's low come together, is that if we see a rally, it's likely to create a continued pattern of lower highs and lower lows. So I'm not looking at this market for next week in terms of it being a great bounce candidate. Maybe we get a bounce, but when we see things like Silicon Valley Bank imploding here, and what's the key lesson about this, I think, is, again, you look at the direction of the 200-day moving average, and even though this market rallied from 200 up to 350, there was money to be made, but rallies with a declining 200-day moving average are guilty till proven innocent on the longer term time frame, just as they are on the shorter term time frame. And this stock was also below the declining 5-day moving average before that big gap lower, so it shouldn't have been purchased. And I hope none of you did. I'm not by any means saying that some of you didn't own it and didn't might have avoided a disaster. Is all I'm trying to say, is if you look at some basic principles about trading with the trend, that with a declining longer term moving average, you can trade them for bounces, but they become bounces. And then when the shorter term time frame tells us that it's guilty till proven innocent, then you've got to move the hell aside. The Russell 2000 was down 6.5% this week, and this market, we were looking at as having the potential to hold this prior band of resistance. And what I'd said in the video last week was I was looking for, a likely test of this anchored volume weighted average price in the 5-day moving average, but I wouldn't be a dip buyer. I said, it's a place where I would look for the potential that if it was to hold in here and get back above the 5-day moving average and make higher highs and higher lows, then perhaps it could rally. But instead it failed, and it failed hard. So this market is clearly, still in a major downtrend below all these volume weighted average price levels. And let's talk real quick about Bitcoin as well, because here we see on Bitcoin, let's just move this over so you can see the price scale. We broke below the year to date. That's that purple anchored volume weighted average price. And now we're down to the October anchored volume weighted average price in this market as well. That's actually from November is when this market made its low, but it's testing that right here, right now. I'm not saying it's going to hold. I don't, I've actually stopped trading Bitcoin probably about 6-8 months ago when some of those firms started going down. But there's just selling across the board. The biotechs, I'm sorry, they're not the biotechs, but the semiconductors are holding up best year to date. And this was a really choppy week in here because we saw that initial strength failed, and then we saw this higher high right here. And you could have purchased here with a stop under there. I wasn't here for this market, but that would have been a viable purchase. But I would have said that, I would have taken a third off on strength, probably another third on the breakout, and then have a stop, down in here. But to ride it down like this is unforgivable. And now this market's below the declining 5-day moving average, testing the year-to-date anchored volume weighted average price. And here's the volume weighted average price from the December low. That kind of ties together with the 50-day moving average. That seems highly likely it'll be tested near that 233 level next week. If that fails to hold, the bigger anchored volume weighted average price off the October low ties together with the 200-day moving average at about 218. I don't think it's unrealistic to think that might happen. I'm not making that call, but it certainly looks possible. Again, I'm not here to make calls and predictions. I'm here to say this is the path of least resistance. It wouldn't surprise me to drop, something like this, maybe come down to this 50-day moving average and anchored VWAP from here, bounce a little bit, undercut this prior low right here, bounce just a little bit, and then fall apart from there. There's a lot of risk in this market. If they didn't scare you out in 2022, they're likely to wear you out. This is really the disaster because, as we know, there were some great trades in this early in the year. Some, the breakout trade, this trade, and this trade Alphatrends subscribers took advantage of. We got stopped out over here, whereas a lot of people were saying, hey, this is the investment. And, even if it was an investment candidate over here, if you're still holding it, learn some money management, risk management principles as it maybe breaks below the, makes a closing low below the 50-day moving average might have been a way to get out of this. But it still, is, and it started the week out below that declining 5-day moving average, and it was just guilty till proven innocent. There was no reason whatsoever to purchase the biotech stocks. Let's look at the weekly time frame here. So again, if they didn't scare you out on the way down, they're likely wearing you out, just as they will in so many stocks that we see right now with this same type of pattern that have tried to rally, but they failed. They're still in these, longer term ranges. The moving averages are crisscrossing, indicating indecision, and it's just a disaster. The financials held up actually better than I would have expected with the Silicon Valley Bank, the way that dropped, but still they're clearly a disaster, and we saw that they were starting to weaken the last couple weeks in here, and they started the week below the declining 5-day moving average. In fact, actually they started just above the 5-day moving average. They gapped down, and then that declining 5-day moving average said don't trust any strength in here. If you're going to, be a day trader of these little rallies, you're fighting the more powerful trend. So this market failed at the year-to-date anchored volume weighted average price, declining 20 and now declining 50-day moving average. Maybe you get a bounce that looks something like this, but it wouldn't be surprising to see maybe even this trace out a shoulder, head, right shoulder over in here. The market is in trouble. There's still a lot of risk in all areas of the market, including energy, which is down $1.10 today. And for the week, again, we saw the market rally up to the declining 5-day moving average right here on that gap up on, I guess that was yesterday, and it ran right into supply, right at that exact level, at that 5-day moving average, and then it was lower highs and lower lows. You want to anchor a volume weighted average price to this and look at how that second day, so this was yesterday's VWAP. Today it rallied up to that level, found supply there, and then sold off again. That's a strategy I wrote about in my book, Maximum Trading Gains with Anchored VWAP, available on Amazon US, Amazon Canada, Apple Books, Google Books, and Barnes & Noble as well. If you like this video, give it a like. Thanks for tuning in, and I'll talk to you next week.